Tubers, Mike Martin's here, Mike Martin's channel. I got a really, really good article that was sent to me in my comment section there. Sometimes, you know, I go into the comment section. If you send me an article or a link, sometimes it gets flagged and I can't see it. So it's really hard for me to see sometimes when it's a good article. I just miss it. You could go to Instagram and just message me on Instagram. My Instagram is on top of my YouTube channel. You'll see Instagram button there. Just go there and just message me there if you can, please. Anyways, it's a really good one. And this is something I've been talking about, I think, about 2-3 years ago. I've been touching on this a few times because London did it and a couple of other countries did it to stimulate their economy. Interest-only loan. What's going on here, people? Interest-only loan crackdown could lead to U.S.-style meltdown. Remember my stories from 2007? Watch some of my older videos when I was down in Miami when this crazy housing crash happened back in 2007, and these are all the telltale signs. Let's see what it says here. A leading economist is warning Australia's housing market could be heading for the U.S.-style meltdown as crackdown or on interest-only mortgages forces more home buyers to start paying off the principal on their loans. Yes. Yes. We've got a huge chunk of loans out there that are interest-only, Economist Richard Holden told 730. They're typical 5-year or so period. Yeah, especially when rates go up, what are you going to do if they're not, the interest only gets scrapped? What if the product doesn't exist in 5 years after your term is up, or your 4 or 5 year term? Anyways, and when people have to start paying back the principal on those, that's going to send their repayments up a lot, and many people might not be able to afford them. So, we'll talk about the interest rates in a sec here. At its peak, the last 40% of all new loans issued to banks were interest only. 40%! Yes, I'm reading it right, people. Banks have lent in fairly imprudent way. Professor Holden said, of course the bank's going to do that. They have lent too much. People have encouraged to borrow too much. Partially by the market and partially by the general mania of property in Australia. So if you've just been living under a rock and just tuned into my channel, please comment on my nice hat I'm wearing in the comment section. Also, what I wanted to say in all fairness was, Australia's been in a housing bull market since 1979. So if you've owned housing in Australia and you bought before 1979, you could use your house as an ATM machine against inflation. You could actually do it. You could actually live off your house equity for the last, since 1979. If you were good with your money and didn't buy useless cars and stupid stuff, you could actually have lived off your house. If you had 2 houses, you could be living well if you had basically someone renting another house. So, but that was back in 1979. So let's go. In March last year, banking regulator decided it is time to intervene and avoid mass defaults in the future. What, you just gonna do this now? You get people into a product thinking they're getting into the right thing, trusting their institution. I think the underwriters and the lenders and all these, like, shame on you. Shame on you. The Australian Prudential Regulation Authority, APRA, ordered that the banks slash the volume of interest-only mortgages below 30% new loans. APRA's action could well lead to a nice, smooth diversification of home loans on the books of the major lenders and make sure that the interest-only loans aren't too large proportion, Professor Holden said. On the other hand, they could kind of burst the bubble of the interest-only loans. The real concern is that, because if you like a sort of hard landing in the home market, we might get out of it okay. But there's a real risk of some kind of U.S.-style meltdown. So this is a very long article, people. I'm going to read as much as I can till maybe a customer walks into my store here. And let's keep going. Lynn Wishart has an interest-only loan that switches to principal and interest next year. She wants to extend the interest-only period, but now has doubts her bank will let her. If banks choose not to let people have the interest-only loans, then I can only imagine that there will be quite a number of people, and maybe a similar situation to us, who won't have the excess cash to be able to afford the principal on interest loans only, she told 730. So let's go back to basics, guys. You borrow $100,000 on 5% interest. You're looking at about 5% interest. You're looking at about 5% interest. Wow, you're looking at about $8,000, $7,000 a year in finance charges. Okay, at 5%. Okay, so with fees and stuff, but you can get it down to $6,000 or $7,000 a year in finance charges. You got $200,000. You're paying over $14,000 to $15,000 depending on the bank you're with, an institution you're with the hidden crap fees and property taxes. You got $300,000. You're looking at $17,000 to $21,000 a year in finance charges. You got $400,000. You're looking at, so this is what you're looking at, people. This is what you're looking at, and this is coming from a hick like me that doesn't know nothing. So let's keep going. Miss Wishart is studying teaching, and her husband works full time. 2 years ago, the bank gave her an interest-only loan to buy a home for a family member. The family member has since moved out. The rent from her new tenant only covers the mortgage repayments. We're only I'd say, pretty tight budget, Miss Wishart said. We don't go out much. We don't buy any new clothes. We live from pay to pay, and if there were any change whatsoever, we just couldn't do it. So why would these companies urge people to sign on the dotted line, underwriters, lenders, knowing that the deal will fall apart in 5 years? Their total debt service ratio doesn't fit. Their CGS doesn't fit. Nothing fits properly. Why would they know? Were they expecting in the next 5 years they'd get a raise? I highly doubt that they were going to get no one gets a raise anymore. I mean, if you get a raise, it's just a 1 or 2% every other year, and that basically gets eaten up by taxes. When Brian Hartzer told the parliamentary committee that more than half home loan book at Westpac was interest only, I found that pretty stunning and a little bit shocking, to be honest. Professor Holden said, I prefer. Westpac leading practices are now being scrutinized in court. So this is going into court. Now let's see what these guys say. Oh, it's at the end here. Let's see what they say here. ABA residents comparison with U.S. subprime housing crisis. I was down in South Florida when this thing melted in 2007. The Australian Bankers Association declined 730's request for an interview. It's all informed to make a comparison to Australia's housing market with the situation in the United States during the subprime housing, and the ABA said in a statement, when issuing home loans, Australia banks take into account whether customers can afford to meet both interest and principal payments, even if the loan is interest only for a period. So a lot of people bought into this. A lot of people bought into this down in South Florida. I remember these jumbo loans and these Mickey Mouse loans, and I would call them Mickey Mouse loans. Bought in thinking that, the interest is good, money's free, basically. This is a good thing that we could do. This is good for our future. But in reality, if you don't get a raise in the 5 years to have to offset paying principal on the payments, because you know what? They're scared of people walking away from houses worth less than what they bought them for, and that's what the key is. If you're paying interest only, you're not paying down the house. If you're not paying down the house, then if houses do dip 5-10% and interest goes up, guess what's going to happen? People are going to walk away from their mortgages because they'd rather pay for something that's not worth what it is anymore. Let me know what you guys think. Remember, don't take anything I take serious. Do your own research. Find if you should buy or not. I get a lot of questions, people asking me. I am not a real estate agent or a broker. I don't know nothing. I could barely read. Thank you very much for watching my video, and get this out there, and let's wake some of these people up. And big hug to everyone. Thank you.